This is Eric Muathe with a continuation of the Ultimate Muathe Breakout. This time I'm going to be answering a question somebody sent me, and the question is, Eric, when the monthly 3-year RSI is approaching 69.10 or the 3-year high, what should I expect on the weekly and the daily RSI to be doing? That's a good question. So they want to know what happens to the daily and the weekly if you get the monthly breaking out on the RSI and on the MACD. And the question continues, should they be in unison, reacting the same way as the monthly RSI? So what should they be doing is the question. That is, should they be moving in an upward direction pointing towards 69.10, or does it make a difference if the daily RSI is breaking out or if it is pointing downward? The same question goes to the weekly also. Trying to wrap my thinking around this system. So basically, I think I follow the question here is, we are using the monthly RSI to tell us when a stock or an index is looking like it wants to break out for a major move. So what about the weekly and the daily charts? Yeah, so why don't I try my best here to explain that. So let's take a look at one of the best performing sectors in 2013, which was solar. Now this is a monthly chart for the solar ETF, and actually this is weekly. Let me go back to the monthly. So this is the current monthly chart for, let me change this to weekly to monthly here, sorry. So this is a monthly chart for the solar ETF, TAN, going back 4 years. And I want us to pay attention to when it broke out. So we can see, based on our system here, 3-year highs on the RSI. The breakout took place here sometime in April here. That's when it broke out to 3-year highs on the price, or 1-year high on the price, 1-year high on the price, and 3-year highs on the RSI, and also 3-year highs on the MACD. You can see 3-year highs here on the MACD, and also you see that breakout here to 3-year highs on the MACD, and 3-year highs here on the RSI. All this took place right here in April, right there. So that's the time period when everything started breaking out, somewhere around here in April. So we know that this system works. It broke out here on price, broke out RSI, broke out MACD, broke out MACD to 3-year highs. So we know that is one of the reasons why this was the best performing sectors in the entire market in 2013. So, and let's take a look at what some of the leading stocks in that sector were doing. Let's begin by taking a look at JKS, and this stock between April, which is somewhere here, when the solar ETF was breaking out, the stock has moved or managed to move from $7.50 all the way to $37. Now that's a major move, major move. So why? Because the stock met the minimum requirements. The thing I want us to point out here is, while we are learning here, is you'll notice that the RSI was trending higher here, back above 69.10 by July. Let's take a look at another solar name that did well in 2013, YGE. And from the time period in April here, when the solar ETF was breaking out, the stock managed to move from about $2.50 here all the way to $8.50. That's another major move. Let's take a look at another one, Solar City, from April of 2013, managed to have a nice spike almost immediately, moving it from about $20 all the way to $45 in about 1, 2, 3, 4, 5 months. Eventually the stock would go on to touch $80 since the breakout here. Notice how powerful the RSI was, making all-time highs. Also notice how powerful the weeklies on the RSI, breaking out to all-time highs. So it makes sense that when something is the most powerful it has ever been, you're going to get a big move. Take a look at SPWR, another solar name, and it too, since April 2013, broke out. You can see the breakout took place there, so entry point was there. Or you can use these highs, the previous weekly closing highs there, and this took the stock from a price of about $10, $11 all the way to the mid 30s. That's a big move. Let's take a look at one more. CSIQ, since April of 2013, stock broke out somewhere here in April. So you can either use this breakout or you can use this breakout. Whichever breakout you use, one or the other, you're going to get an entry point. And so let's say the breakout took place at $5. The stock would eventually go from $5 all the way to $42 in under 9 months. So that's a big move. So let's take a look at the solar ETF again to see that you can see here that it was breaking out, and we've already looked at this. RSI was good in middle of April. MACDs were good, everything was good. So let's take a look at the weekly for the solar ETF at the time. So what you're going to see is that as long as the minimum requirement on the monthly has been met, and this is important, as long as the minimum requirement on the monthly has been met, don't worry about the daily and the weekly charts because they'll take care of themselves. In this particular instance, the monthly was breaking out, and you also see that you can use this breakout to new highs here, about $20 when the monthly was breaking out. Take a look at this. This was a breakout also on the weekly chart. There was also a breakout on the weekly chart here, somewhere around there. There was a breakout to fresh highs there. So even the weekly was doing well. The weeklies will take care of themselves if the monthly is meeting our minimum requirement. So that's the main key, the main takeaway from this video is don't worry too much about the daily charts. They'll take care of themselves. Don't worry too much about the weekly charts. They'll correct themselves as long as the monthly chart meets the ultimate Muathe breakout minimum requirements for 3-year high on both time frames. So you see here that we have a breakout on the weekly chart. It's taking care of itself, and it eventually goes and touches 69.10 also. If we take a look at the MACDs on the weekly, you see that they take care of themselves. Don't worry about this too much because even here you can see on the weekly they were breaking out in April. It was a breakout to new highs in April. Again, don't worry too much about this. They'll take care of themselves. And you can see there was a breakout here as price was breaking out. Again, all this was taking place in April. The time frame is still the same even on the weekly chart here. As you can see, this is a time period in April where we are getting the breakout in MACD, breakout in MACD, breakout in price. Everything was taking care of itself on the weekly. So let's take a look at the daily chart at the time. Now the daily, of course, you can see it's a little bit squeezed. The data is squeezed here. So April, you can see on the daily, took care of itself with a breakout above previous daily closing highs. So there. But let's take a look at a shorter time frame. This is 4 years daily. I want to make this a 2-year daily so we can have more data that we can see. So 2 years, and you can see on the 2-year chart there was a breakout above this daily closing high. So the dailies took care of themselves. Take a look at that breakout. That was perfect. Now let's make this even closer to a 1-year daily so we can see that breakout even better. And so take a look at this. So we're going back to this April time period here, right here. And you can see there's a price breakout above daily closing high. So the previous daily closing high on a 52-week basis was here. we broke out. Take a look at the quality of this breakout. Was a hot knife on butter. I mean, this thing was, it's just sliced above that previous high and took off. Also take note of the fact that it seems like there was a cup, handle, and a breakout. You can see that. Let me draw that again. You can see the IBD here, cup, nice handle, and a breakout. Bam! And that breakout was above this previous daily closing high. Just perfect. So the dailies took care of themselves. You can see that the dailies also break out here. Don't worry about the dailies too much. They'll take care of themselves. All right. Take a look at what was going on as far as the MACDs. And the MACDs, as you can see here, breakout in April here. Even before the breakout, they're already making new highs on the MACD, so don't worry about that. And you can see that the other MACD was also breaking out here, which happens to be the same time period in April, May here, this time period. Everything was breaking out. So the takeaway here, and to answer your question, is if the monthly is giving you the minimum requirements on the RSI and on the MACD, don't worry too much about what's going on the dailies and on the weeklies, because they'll take care of themselves. So just make sure that the monthly RSI is looking good. And solar has been looking good. As you can see, multiple breakouts. There was another breakout here after 1 month of rest. Breakout took place in July. There was another breakout after 1 month of rest here that took place in September. So another entry point. So solar has been giving you multiple entry points, and if it can break out again, which who knows, if it can break out above this current monthly closing high of 38.11, then solar remains a buy. As long as it's above that level, it's a buy. Anything below that means it's failing. So just remember, you want the minimum requirements to be met, and if they are being met on the monthly, don't worry too much about the weeklies and the dailies, because they'll take care of themselves. Eric Muathe, good luck, peace, and blessings.